With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Just past 4 p.m. Welcome to the COB. I'm Nadine Planey.
And I'm Juliette Sarli, and I love that we dressed alike today, Nadine.
I know, we got the Monday memo, black and white.
Or Tuesday.
Tuesday,
Today
you're right.
is Tuesday, yeah. Let's have a look at where the market closed in the black, like us, up 0.7%. A very solid day, except for one stock, which we'll talk about at length in a moment. But I think every single sector tracking higher. Of course, some optimism from US markets overnight as well on this hope that you will see some talks between Presidents Trump and Xi.
Yeah, but I think that it is really quite interesting that we've risen by as much as 0.7% for the CBOE Australia Index on your screen, because all through the day today, US futures have been lower. E-minis, S&P 500, NASDAQ E-minis, both coming under pressure right now. We've got the price of gold coming off slightly, copper down. Was reading a really interesting note from Vivek Dar from the Commonwealth Bank talking about supply-demand dynamics this year. Looks like we might be in for a bit more supply. So, yeah, interesting and nice to see that green on the screen. I think it was 3-month highs today for the ASX.
Yeah, absolutely. Back to that 3-month high. But we do have the education free fall. Our producer Marius also came up with a very clever "we don't need no education"
Another
line.
Brick in the wall.
Oh yes,
I'm surprised. He's younger than that vintage, I've got to say.
He's very well read though. But of course, we're talking about IDP Education. It's big slump today, down around 50% or so at one point amid the cost to its the cut rather to its outlook, because of course we are seeing this downturn in international students.
Yeah, we'll talk about that with our expert guest who's coming up, Martin Crabb from Shaw Partners. Worthwhile mentioning the factory activity read that we got from China today. So this is the Taishin private read coming out showing that for the first time in 8 months, factory activity shrank. Why? Well, the tariffs, of course. So we're starting to see that come through in some of the hard data, even in China. So yeah, a little bit of a waning of sentiment maybe just in the immediate aftermath of that release coming through.
Absolutely. The banks, though, had a great session today. CBA cannot stop that stock, 1.3% higher, pushing towards $180.
Oh boy, that is toppy. Westpac also doing well for the second day in a row, up by 1.5%. Other sectors to keep an eye on, though, gold is very strong. Newmont up by 4.25%. A little bit of safe haven status at this time. Also seeing the US dollar come off.
Interesting evolution, up almost 4%. I just did a little bit of a deep dive into gold, if you will. It's risen 135% over the past 12 months. A lot of people saying hold or lighten, but it still gets going higher, a bit like CBA, doesn't it? Regis
Resources was mentioned on the call today. I won't give it away. You'll have to listen to that episode. But our viewer had said, I've done really well out of it. I've been a long-term holder. Should I take some profits? It was interesting to hear my guest's reaction to that. Here's energy, looking a bit better today. Strike Energy at the bottom of the screen at 17 cents per share.
And Treasury Wine Estates cutting its annual guidance. Shares, though, up 0.4%. Now, it's citing weak US demand, particularly around the midpoint level of that $15 a bottle for, well, $15 for a bottle of wine.
So like 30 Australian, I'm kidding. Not quite that much anymore. The Aussie is doing a bit better lately. Telstra will be extending its coverage through a partnership with SpaceX. Shares are up by 1%.
LifeX, Life360, not LifeX. Life360 a little bit lower. It is announcing around $250 million in convertible senior notes due in around 5 years' time.
Yeah, down by 2.7%. And as far as some of the broker moves, Rio Tinto expected to underperform its peers. According to Jefferies, it's downgraded it to hold. Now, shares in Tabcorp rising after Morgan Stanley hiked its price target on its new monetization plan.
And some C-suite changes, including at Domino's. Of course, they're really trying to get this Japan business, the French business, back up and running. They've appointed CEO of Asia, Josh Kilmanick, as interim CEO of Japan.
MD of Wesfarmers, well, at least the Officeworks division, Sarah Hunter will step down in August. And the chief financial officer of Pilbara has also resigned. PLS down by close to 0.9%.
All right, let's find out what's happening with IDP Education with Martin Crabb from Shaw and Partners joining us, our Tuesday guest. 50% drop at one point.
Yeah, a bit of a bloodbath, wasn't it? Sorry, I didn't get the black and white memo. Apologies. Next time I'll get better. Yeah, I mean this is a stock that was $40 in its heyday when it was gaining market share, and it bought the India to Canada route from the British Council, and it was growing market share, really strong dynamics in student placements, and lots of kids coming from Asia into Australia and Canada and the UK and the US, and hasn't all that changed. It's one of the most heavily shorted stocks, and now we can see why. Big downgrade. So the market was around 150, 160 mil EBIT. They've said 110, and they were guiding for a stronger second half. The second half club, when you come in and your first half's a bit softer and you go, second half. So Flight Centre said the same thing. We'll make it up in the second half. We're confident we can reach our full year. So Janelle O'Shaughnessy said the same thing at IDP, and the market sort of believed her. Stock had a bit of a bounce, and then today was just like a mea culpa. My read on this is there's a global war against students, and it's all. So the four major countries that take in foreign students are the UK, the US, Canada, and Australia, and we do punch above our weight. It's one of our biggest export industries, or was. But obviously, you need to find houses for those kids. You can't just bring them into your country, educate them, and have them take up the very rare housing stock that you have. We know vacancies in Australia are running below 2%. There's just nowhere for these kids to live, and they're taking homes away from people who need them. So it's like, without solving that problem, governments around the world have just said, we're just going to cut back. So everyone's cut back, and now Trump's saying that that foreign students can't go into places like Harvard. So it's just getting worse. So I think the only thing they can do there is cut costs, and you can only do so much of that in a service business. If you cut all your people out and the thing picks up, you've got to hire them all back again. So you tend to hoard labour, particularly experienced labour, or gain market share in a market that's absolutely plummeting. So not looking good for them. So a lot of people just, I'm out, I'm done. I've followed this thing all the way down from 40. I used to love it. It used to be a really good stock in my portfolio. And today we just saw capitulation.
Look at that.
Will we see a bounce? It sort of opened down 30 and then just kept going after that and ended up, I think, below. Did it close below $4? Yeah, it closed below $4. So that's a pretty big sell-off.
So you were showing us a chart previously. We had it up on screen. So you reckon that there could be further for it to fall?
Look, I don't know, because it's really difficult to catch the falling knife in terms of earnings. So, one measure, and it's not a particularly good one, it's just the book value. So if you add up all the cash and assets and stuff on the balance sheet, it's at $2. So there's a defensible valuation of the business is based on its accounting book value that always can provide a bit of a backstop for investors. If you go, right, okay, if the earnings outlook for this thing's really, really bad going forward, what's the longer term book value of the business? So it's still got, another 50% to fall to reach that level. I know during COVID we looked at book value a lot, because who knew what the earnings were going to be? So it did provide some support to stocks, but I just ran these numbers thinking, well, if its book value is $5, and it's probably a good buy down here, because at least you've got some protection, but still a bit of a way to go on that one.
Do you think there will be maybe a little bit of a bounce tomorrow?
Yeah, I mean, I think some people today just said, look, I'm done, because it's fallen so far already, and as I said, 40 down to 8. If you held a 2 or 3% weighting back in the day, it's probably now 50 bips or 40 bips. There is a risk now that's probably going to go below $2 billion market cap, so maybe it goes out of the index. So there's another reason probably just to get rid of it. I mean, if you want to go back to a normal weight, you've got to triple or quadruple your holding at these levels, which is a bit of a gutsy move. So I think when stocks fall this far, and you had Domino's up there before, that was 160, it's now 20. That's gone out of the index. So that's, I suppose, the story that can happen to you if you fall from grace. You stop being a growth stock. So I think growth managers, if they were still in there, probably cut it, and then you'll definitely see some short covering. Like if you have a short and it's down 50% and you don't cover it, you're mad. You've got to lock in some of your gains, because markets go up over time, not down. So you'll definitely see short covering. I wouldn't have been surprised if there was some short covering today, but I think it was over 10% short from memory. So there's probably still a little bit of that. So I'd imagine it bounces, but do you need to be there? Is the industry going to recover anytime soon? The government's going to change their tune? They should. We all know that the industry that they're in is a fantastic industry. To take kids from underprivileged countries, give them a decent education and send them back home again, or get them to add to our workforce, I think it's a great business. But obviously governments have said, look, the problem is not with education, the problem is with housing. Infrastructure.
Yep. So we'll see if private equity comes in. Maybe. We see one less listed player on the ASX, which seems to be the trend. Can we just go back to some of the data that we got today out of China?
Yeah.
So I mentioned in the intro, the hard data starting to come in and reflecting some of the tariff pain. Is that how you read it?
Yeah, very much. I mean, this is still a survey, so it's not technically hard data. It's Purchasing Managers Index, and there's a couple. There's the official government one, and then there's this one which is Standard & Poor's and Sitechin, I think, who do this, and it's mostly small and medium enterprises. It does jump around a lot from month to month, Nadine. So what I did here was just take a 3-month average, and you can see the trend is clearly down. And one of the reasons that the Chinese government's stimulating and cutting interest rates, and Hong Kong interest rates are down to 1.3%, the overnight cash rate there. So they are easing financial conditions and monetary conditions because the manufacturing sector is clearly slowing down. So this suggests it's got more downside. That read today, as you said, is about just above 48, which you can see is a pretty low number, but it's more also the trend is not great. So you'd imagine with tariffs coming on, and we haven't really seen the impact of tariffs. Everyone's talking about them. Walmart says we're going to put up our prices, but we haven't actually seen the numbers change yet. The numbers are still quite buoyant in terms of spending and things like that. So I think the fact that that's starting to slow down now suggests there was a big pull forward in demand ahead of the tariffs, and now that's come off. Factories are slowing down. So this is probably going to start to get a little bit worse from here.
What about our own economy? Because we had the RBA minutes, but we also had Assistant Governor Sarah Hunter speaking today, and she was essentially saying, look, the RBA is not really panicked at this moment.
Yeah, I think the cautious is probably the word you take out of the minutes, and probably I didn't hear Miss Hunter's speech, but I did see a couple of snippets, and it seems to be the narrative is that they are poised to do more if they need to. But the playbook is that the economy is, it's had a pretty soft first quarter, but it's probably going to pick up a little bit. But the labour market's starting to soften, not dramatically, which is good. So that'll take a bit of sort of wage heat out. I think the minimum wage result was good. It was lower than last time. It came in 3.5 versus 3.85. So wage pressure coming out. We're probably a beneficiary of the tariff war because we'll probably get some cheap imports. So things are looking pretty good for the slowing economy, inflationary pressures coming down. We can continue to lower interest rates towards neutral, which is probably around 3 to 3.5, something like that. So 1 to 2 more cuts is kind of looking likely in our view, but they are ready to cut them more. So I think what the market's pricing in is more than that. They're looking at sub 3. So I think the market's suggesting that maybe the economy gets a bit softer and the RBA can cut an extra time. But sort of consistent with their narrative is that they're sort of, the economy's doing what they thought it would do. Inflation's coming down slowly but gradually. We're not seeing a big slowdown in the economy, so unemployment's softening. That allows us to cut a couple of more times. That's kind of what they're saying.
Yeah. So, we do have the global dynamics. Of course, we're hoping for some fast deals to be done on trade, although I wonder how good they will be, for lack of a better term, if we're pushing up against a deadline with all these countries. Anyhow, but generally speaking, what is your view on the state of corporate Australia as we head into the August reporting season? Because as you say, we haven't, and we won't in these results, see any impact potential coming from tariffs. And you've had the likes of Judo Bank, for example, today update saying it's on track to receive or to achieve its FY25 guidance. So it's not all, dire out there.
Yeah, and look, you kind of think that, look, we just saw a couple of big we saw Treasury Wine downgrade, we saw IDP Education downgrade significantly. We've seen a lot of downgrades, but not sort of right across the board and not apart from maybe IDP, not really big downgrades, but I think corporates are telling us, look, it's probably tougher out there than you think it is. The share market grinds inexorably higher. We just added we added another, 70 bips, 60 bips today. That's just all to the PE. Earnings aren't being revised up, they're being revised down. In fact, 2025 EPS growth is now negative for the ASX 100 over last year. So the profits of the ASX are actually going backwards, and yet prices go up and up and up. So it's all PE re-rating. But when you sort of break the economy down, you go, well, the consumer's doing okay. Unemployment's not an issue, so most people have got a job. Wages are chugging along at 2, 3, 4, depending on the industry you're in. You're getting an interest rate cut. You just got a tax cut. Government spending's like a drunken sailor, right? 6% of GDP or something, right? So government spending's strong. Consumer spending's, even though people are pocketing the savings, they're still in pretty good shape, paying down the mortgage, whatever.
Minimum wage went up today.
Yep.
Yeah, and then you look at the export sector. Well, that iron ore's still around $100 a tonne, so that's okay. Volumes are still okay. So on the external side, the X minus M in the equation, that looks okay. And then you've got investment, and we saw investment doesn't look brilliant, but it's probably expected to grow about 4 or 5% next year. So all of those components, if you break down the economy and go, well, what's broken here? What's really going to struggle? I think corporate profits will come under a bit of pressure, but in the overall scheme of the Australian economy, it looks okay. And that's why you're seeing all this buying. I mean, if you think, one of the things that Asian investors are telling us is that we're moving money out of the US. We're still moving money out of the US. It's 70% of the world market, and it looks crazy expensive. There's better value elsewhere. So if you take that 78, you got 30 left. Australia's 2 of that 30. So we're getting, 6 or 7 cents on every dollar that's moving out of the US. And they don't buy stocks. No one looks at companies anymore. They don't have enough resources. They just buy the index. Biggest stock in the index, CBA. So today, again, there would have been more money coming into index funds buying CBA, the other banks. So they look expensive to us, but if there's a wall of money continuing to come in, they're probably just going to get more expensive.
So just quickly and finally, where then do we see the ASX at the end of the year, given that we've had, a 6.5% run up since April?
Yeah. Well, it's 15% off its lows. If you pick the 7th of April or the 8th of April, I think 7th of April I think was the low here. That was after the tariff wars. We're up 15%. I think where we are is a little bit pricey. I don't think we're anywhere different from where we are at the end of the year. In fact, I'll probably see it a bit lower because I still think earnings expectations are too high, and we're trading at almost 19 times. So with government bond yields at 4.5 for 10 years and 5s for 30s, I'd rather be in bonds and equities right now. So I'm still cautious, even though this market rally's been pretty powerful. I'm still sitting there being pretty cautious.
All right, wise words.
Martin Crabb, Shaw Partners, CIO, thanks as always for joining us on a Tuesday.
Thanks for having me.
All right, when we think about the stock of the day, look no further than IDP.
IDP Education, exactly. And you were joined by Philip Pepe from Shaw Partners, Henry Jennings from Marcus Today.
EBIT guidance was down 30% versus consensus. Share price was down nearly 50%. Again, we saw some warning signs. We thought it was in the price, but there was sticker shock that came out this morning where they basically said, hey, things are tough, we'll manage costs best we can. Once market darling, there'll be material downgrades overnight. Some of the long-term supporters may capitulate and say it's too hard. It's just dead money for the foreseeable future because the issues they flagged, Trump, they're not going away anytime soon.
This is, this should not come as a surprise. After all that's happening with Harvard, after all that's been in the press about university students, I am amazed that any analyst has got any kind of recommendation on this apart from avoid like the proverbial. This has got 32 million shares shorted. So someone has made $100 million today.
Wow.
$3 on 32 million shares. Well done, guys. You've nailed this one.
Well, obviously that was the laggard of the session.
Yep, absolutely. Let's start with the leaders, shall we? Focus on the good for now. Clarity Pharmaceuticals leading the pack in percentage terms on no news, up by 7% to $2.01. Judo, I said they've updated, they've affirmed their guidance, saying that they've got really good traction happening in the SME market. And Tabcorp was one of our top companies as well. Share price, or target price, I should say, lifted to 78 cents per share.
We should note we did speak to Clarity's CEO earlier, Dr. Alan Taylor, so you can find that interview online, of course, a couple of days ago, and I think it's still getting the tailwinds on that Amplify trial is helping it out. In terms of the laggards, of course, it's IDP Education. We've touched on that. Mineral Resources also under pressure, down 6%. And Elders still getting a little bit of backlash, of course, after the ACCC raised concerns about its takeover of that other agricultural company.
Yes, it's also trading ex-div today. Champion Iron on the list, down by 3.7%. MTM Critical Minerals. Now, I saw an announcement today in the small cap space, up by 13.5%. It was some sort of e-waste announcement. So yeah, if you're interested, you should go check it out. And Coronado just having a little bit of a snapback after, you know, a few sessions of some pretty intense selling, trading at 11 cents per share.
All right, the laggards here include Findi, down 9% today to $4.03. Frontier Digital off by 24.5%.
Now let's see what's happening overnight, and we get U.S. factory orders for April. We're expecting to see those weaken by about 3, maybe even a little bit more than 3%. And the first of the big jobs reads happens tonight, the JOLTS job openings for April.
Yep, and that could dip to 7.1 million. We've also got Fed Chair Jerome Powell speaking at the Board of Governors International Finance Anniversary Conference.
That sounds really interesting. All right, we'll see if he says anything. We only want to know about rates from him and how he sees this trade tension panning out when it comes to the U.S. economy. Tomorrow we get some GDP partials, so we're expecting to see GDP for the March quarter to lift to 1.5%.
All right, well, the market certainly lifted today by 0.7%, the CBO 200 there. The ASX 200, as we mentioned, at a 3-month high, so some very solid moves despite what happened with IDP, up 53.6%. 8,466 is where the ASX 200 has finished.
So we're keeping a wary eye on U.S. futures. We're keeping our eye for any headlines when it comes to tariffs, and as well, any progress being made on that situation in Ukraine, the war, and there were some negotiations between Russia and Ukraine in relation to prisoner release, but a flare-up happening yet again. When you think about what's happening in the Middle East, the world is a very dangerous place. It's come up a couple times in conversation today. Look, we've got an inflation read, the flash Eurozone inflation read. Don't forget we get an ECB decision this week, a BOC decision this week, and then the U.S. non-farm payroll reports to cap it off.
Yeah, always busy. All right, we will do it all again from 9:45 a.m. tomorrow.
Have a good night.